Welcome to this week's edition of the Cattle Call. I'm Susan Littlefield, and Brad Koima is joining us with Koima and Barlick. We're going to take a look at a variety of things when it comes to this cattle market, especially what's happening with your pocketbooks. Let's talk about the balance, the short-term fundamentals with an outlook that we look 35 to 40 days. And the cash market, at least we got some encouragement there. And if you remember the last time we talked, box beef prices, Brad shared with us a price where he thought we would be. Well, we are beyond that at this point. And of course, a lot of other factors that we will look at how it's going to affect you in the cattle industry. Let's start with this balance sheet. Short-term fundamentals versus the outlook. What are we in store for?
Well, I think that's a great place to start, Susan. And, I'm wrong enough. At least I'm glad to be wrong when it's the right way. I'm glad the boxes are higher than what we had talked about the last time. And it looks like there may be a little more room to go. So, to your question, I think the short term of the market is in pretty good hands. The boxes led by the middle meats, which is the steak cuts, basically, for those of you that don't know, the strength there has been surprising and I think surprising to everyone, frankly. So we're seeing a lot of business here going up into this Labor Day weekend, which is late this year. Now, the business after Labor Day, this so far, I'm not saying that it's terrible. I'm just saying that there isn't much developing yet. That would be normal. Normally you get a seasonal high in the cash market right about now because you got an uplift in the boxes, and then for the Labor Day feature, and then that would follow by going into bigger numbers in the north and maybe a demand period that's a little more sloppy as you go into September and October. So I think cash news in the short term is all right, at least basically on what's happened so far in the south. We've seen those bids go from 105 last week to 107 already. Now, typically what we've done here is we've been a couple dollars better than the south the last several weeks. So far, we haven't been able to do that. Now, today I can get a little bit of 107. Yesterday I couldn't. We're not going to take that yet, I don't think, because we think we should get more like 109. So the short-term cash feels, I believe, all right. I worry a little bit about the longer term for a couple of reasons. One is our relative slaughter level has been, in my estimation, not quite as many as we should have. Killing 630 something. Remember those weeks we were killing 650 to 660 and we felt, okay, this is good, we're catching up, and now for about 4 or 5 weeks now we've killed that. And if we go into this next time where we have the cooler clean out schedule will start in the next 2 or 3 weeks, everybody's going to lose a day somewhere along there too. So that and the fact that the October's carrying this premium to August, I worry a little bit about that incentive, to say, well, looks like it's going to get better. You might as well make them a little bit bigger. So I'm kind of encouraging my hedge traffic here to, be alert. I think I said the last time and maybe even the time before that this 112 and a half area on the October cattle, there's a gap there. That's where the whole thing tipped over back there in February when we realized that COVID was the real deal. That would get us all the way back to that level. That'd be a spot that I'd really pay attention to on a chart, that 112 level against October's.
Well, let's talk about this cash market. You mentioned it here briefly, and you look at encouragement. We saw some early bids coming out of the south back, Monday into Tuesday. We do have, and you and I talked about this earlier this week on the Fontenelle Final Bell, we have a cattle on feed report that's coming out. You look at that, are we going to see just a hold off on this northern bids to a final number because of this report on Friday?
It's starting to feel that way, particularly the packer in the north was his reluctance to jump on board like they did in the south would tell me that they're going to try to fight it. That's not uncommon, especially when the market's maybe getting away from the packer just a little. He's going to try to wait till the very last minute to have to pay the up money. I say that and want to throw up in my mouth a little bit because look at the margins again. I mean, come on, you got a 223 box. We don't think we can pay $1.72 or something like that. I mean, whatever. The margins are there to the point where I believe that there is, with all the scrutiny that they're under and this appreciation in the box beef value, I can't quite imagine that they would have the desire to try to buy the cattle for less, just for the optics, if you want to call it that. So it might be a Friday at 2 o'clock trade on the cash market here in the north. Now the report is guessed to be bigger placements, finally, after several months of very, very low placements. I think that just stands to reason. I am curious to see the weight breakdown. Also, we'll have big marketings though, so I think you'll have a short-term friendly kind of a market again, a report, maybe not so much in the deferreds, but in the front run. I think the thing's okay.
So box beef, last time that we had talked, you'd kind of thrown out a number as to where we could see box beef about this time. It's kind of blown that a little bit out of the water.
Yeah, I know. I said 220, and I think people thought, yeah, right, whatever, you're nuts. And now we're at 223 about. So it's nice to be wrong, right? I think the talk now that I'm getting from some of the people that I talked to, I guess, is that we may go to 225. We are going up really quickly now, $2 and $3 at a time the last 2 days. What that has a tendency to do is that has a tendency to shut off some of your demand because, so the guy bought boxes last Wednesday, right? So tomorrow he goes like, holy balls, they're $8 higher than they were last Wednesday. Maybe I won't buy as many as I would have otherwise. And you get on the other side of the Labor Day by the time this stuff moves through the channels, So I think the boxes are about ready to, crest. Now, these packers are making so much money that we can lose $15 on the boxes and they still should be able to pay this much or more for cash cattle. So don't misunderstand me. There's all kinds of margin there. But in terms of where the meat's going, I think it's a great sign. We've got overall, not just good demand, we've got great domestic demand. This is without 100% hotel restaurant trade. We're pushing these middle meats like this. So I really have some long-term hope that when we get this COVID mess behind us and get this supply balanced out, that we can go back to a market that we all can make some money with.
Well, Brad, we've got Labor Day coming up. Post Labor Day, do we get a little nervous with this cattle market when it comes to movement?
You seasonally, you should and would. Both feeder cattle futures and live cattle to a degree, cash markets as well. What's happening typically is the North is kind of going into that cleanup round where they're right in the peak of those big long-fed calf numbers. Your demand probably isn't as spiffy as it was early in the summer because you're back to school and you're back to a different routine, particularly this year without 100% of the hotel restaurant trade has got people wondering what that's going to look like too. So, it happens kind of every year. So it's not like this is, I've invented this thing, but I just to be cautious and careful when the boxes start to slip, you'd say, well, I guess we kind of expected that.
So do we look at the buying of December, and is October going to be doing some selling in the next couple of weeks?
That's a nice leading question. What I think of when you ask me that is what's gone on in the non-fundamental world of the cattle market, right? The funds. Well, since July, we've added about 70,000 open interest on long side of the market, largely funds. Okay, so now they're in October. So ultimately, they do have to roll those at some point. We've had a really small roll in August, a really small roll in June, even the April, because of the nature of what the market was on its behind, during that whole time frame. But now we're going to have a roll. I only bring that up because that might give you another reason to be careful with the Octobers. There's going to be more selling there because those longs are going to come out. They have to. On the other hand, this might benefit the Decembers, and I fully expect it will. I actually kind of like the December from a supply side standpoint anyway, back to the fundamentals, because of that big drop in the placements that we had February, March, April, May. I think we've created a bit of a hole in that November, December slot because of supply and because of a lack of placements anyway. So I would expect the December to gain on the stuff, and a month that maybe you want to pay attention to is going to be the October. As you'll catch some selling here moving forward.
All right, sounds good, Brad. Look forward to talking to you next week and seeing how the market reacts to Friday's Cattle on Feed report.
Got it. Thanks.
All right, Brad Coyne has been joining us for this week's Cattle Call. I'm Susan Littlefield.